Hello, my dear friends. Myself, Rajesh Wadhwani. I have started YouTube channel Hari Seva IBBI Valuation Cracker. Today we are going to learn income approach session 3. In session 3, we will learn unearned increase, profit method for valuation of special properties, that is hotels, cinema, mall, petrol pump, resorts. So let us start from unearned increase. Unearned increase in land value. In last session, when we are learning lesser and lessee rights, verbally I have informed to you what is the earned increase. Please go through again. When state government, local authorities and semi-government agency often lease land to private entity at concessional rate with a low initial premium and symbolic rent, say 1 rupee per year, to encourage development in their state. When the lessee sell, transfer or assign their leasehold interest, the lease typically include a clause for unearned increase where the government or leasing authority claim a share of profit, usually 50% on the increase in the land value over initial premium. For Hindi users, I want them explain in Hindi. एक्चुअल में जब स्टेट गवर्नमेंट किसी फैक्ट्री या कंपनी को लैंड दे रहा है जो अपने पास आने के लिए फैक्ट्री अपने स्टेट में आने के लिए तो लैंड काफी सस्ते में कंपनी को दिया जाता है जैसे कि रतन टाटा जब अपनी कार कार का लॉन्च कर रहे थे नैनो कार तो उसको गुजरात गवर्नमेंट ने काफी कम रेट में रेंट और अदर बेनिफिट दिए थे अगर टाटा कंपनी अपना ये कंपनी सेल करता है हाइपोथेटिकल थिंक कीजिए कंपनी यदि उसने सेल की क्योंकि उसका गवर्नमेंट के साथ में लीज एग्रीमेंट था 99 इयर्स का या उससे ज्यादा पीरियड का वो 30 इयर्स 40 इयर्स में सेल करता है तो उसको एक्चुअल में जब सेल करेगा तो उसको लैंड का वैल्यू काफी ज्यादा मिलेगा तो गवर्नमेंट क्या एक क्लॉज रखती है कि हमने तो आपको लैंड सस्ते में दिया 0 पैसा में दिया या 1 रुपए में दिया या बहुत मिनिमम रेट में दिया आप जब वो सेल कर रहे हो फैक्ट्री को उस टाइम में जो लैंड का रेट होगा और जो आपने गवर्नमेंट से लैंड लिया है वो रेट है उसका जो डिफरेंस है अन इंक्रीज इन लैंड रेट वो डिफरेंस का 50% आप गवर्नमेंट को दीजिए और 50% फैक्ट्री का रहेगा या जो भी परसेंटेज लीज टर्म्स में डिफाइन किया गया है उस हिसाब से ये अन इंक्रीज ऑफ लैंड का पैसा दिया जाता है सुप्रीम कोर्ट ने भी पीएन सेकंड केस में इसको वेरीफाई किया है कि ये सही मेथड है the unearned increase must be paid to the government or agency upon such transaction. The concept was upheld by the Supreme Court in PN's second case, where it was ruled that the unearned increase should be deducted from the property total value during the lease transfer. वहां पे एक इनकम टैक्स का भी इशू आ रहा था, तो सुप्रीम कोर्ट का जजमेंट था कि जो आपने अनअर्न इनकम का शेयर स्टेट गवर्नमेंट को दिया है, वो डिडक्ट करके, वो कम करके बैलेंस पे इनकम टैक्स फैक्टर देगा. दिस इज अनअर्न इंक्रीज इन लैंड वैल्यू. Sometimes one number MCQ is coming. Also, many times 12 numbers case study is coming on unearned increase in land value. Now we will do one case study at now. Example 1. This is question came in IBBI exams. A government MIDC give 8,000 square meter of land on 99 years lease at the rate of 1 rupees per annum lease rent and charge one time to premium of rupee 450 per square meter in year of 1998. गवर्नमेंट ने 8,000 स्क्वायर मीटर लैंड 99 ईयर के लिए लीज पे दिया, रेंट 1 रुपी पर एनम है और प्रीमियम था उसका 450 रुपीज स्क्वायर मीटर लैंड का जो सेल किया. The lease in the year 98 constructed, the lessee in the year 98 constructed an industrial set of 4,000 square meter of BU area with his own expenditure. The age of said is as now 20 years, as on year 2018. लेसी ने 98 में फैक्ट्री का शेड कंस्ट्रक्ट किया और आज उसकी उम्र 20 इयर्स है 2018 में. एंड टोटल लाइफ ऑफ शेड इज 40 इयर्स और लाइफ ऑफ फैक्ट्री या शेड इज 40 इयर्स. 50% लाइफ रिड्यूस कम हो गई है, यूज हो गई है. द लैंड रेट इज ₹2,000 per square meter and replacement cost is 25,000 per square meter. Lease provide that the lessor is entitled to charge 50% unearned increase in the land value as transfer assigned charges in the case of sale transfer of the property. Lease में टर्म है कि 50% unearned increase income लेसर को देने का है, that is MIDC. So whatever earlier land rate was a 450, now is selling land at 2,000. So this is different 1550. This 1550 is earning by the lessee. But as per terms of lease, out of 1550, 50% will go to MIDC and 50% will with lessee. Now solve this 5 question. What is the lesser interest? Lesser interest is a 50% of unearned increase of land rate. What is total value of property considering a freehold property? Total value of property, you calculate the valuation date. Here valuation date is given 2018. 2018 you calculate the land cost. Land cost is 2,000 rupees per square meter. And replacement cost is 25,000 square meter of factory of that said and constructed 4,000 square meter. What is the lessee interest? Lessee interest, he want to get said cost, that is depreciated cost will come plus 50% unearned increase of the land price he wanted plus 450 whatever he paid at the earlier. That is a lessee interest. What is the reversionary value of the leasehold land? This is a 90 years leasehold property perpetual lease the reversionary value will be negligible. What is the depreciated value of the asset? We will calculate. Here we will calculate in this question uh, uh, depreciation cost. Actually, we will learn all the depreciation method before cost approach. Here, hope you have already learned depreciation in 50 hours training. Here we will do the depreciation of single line method. Please try to understand that method, that calculation. Sorry. Data given. Year of lease is 98. Period of lease is 99 years. One time premium is paid 450 per square meter. Land area 8,000 square meter. Lease rent is 1 rupee per year. Lessee built a factory of building area 4,000 square meter. Year of construction of factory by the lessee is 98. Land rate in 2018, that is the date of valuation, is 2,000 rupees per square meter. Replacement cost of building in 2018 is 25,000 rupees per square meter. Total life of building 40 year. Date of valuation is 2018. Age of said 2018 minus 1998 is equal to 20 years. And life of said is the 40 years. What is the lesser interest? Lesser interest only unearned increase of land rate. And lesser also will get ground rent. But here ground rent is rupee 1. That is very negligible. So he not all interested. So here we will calculate it on earned increase of land price. Okay, this I have already explained. So land area 8,000 square meter. Land rate is 2,000 square meter. And he lessee paid in 98 450 rupees. So total increase in land rate 2000 minus 450 1550 square meter. So 50% this of 1550 50% will go with the lesser and 50% go with the lessee. So calculation purpose 50% into 1550 775 per square meter. The lesser value will be 8,000 square meter land area into 775, 62 lakhs rupees lesser will get it due to this clause of unearned increase of land. Second question, what is the total value of property considering a freehold property? In property, what is there? Land and shed. So land and shed, we have to calculate it value of property at the date of valuation. Valuation date is 2018. What is the land cost and what is the building cost? Land. Land area is 8,000 square meter. Land rate is 2,000 rupees per square meter. Land value 4,000 into 2,000, 1,60,000. 1 minute. Answer is correct. 1,60,000 land value. What is the building? Means that said value. Building area 4,000 square meter. Replacement cost is 25,000 square meter. Both are given in question. 4,000 into 25,000 equal to 100 lakhs. No. 1000 lakhs, equal to 1000 lakhs. Okay. Now for we have to calculate it depreciation by single line method. A- Age of building 2018 and building was constructed means said was constructed 98 is 20 years. Life of factory 40 years. Salvage value assume 10%. Depreciation percentage 20 divided by 40 into 100 minus 10 salvage value. So depreciation percentage is 45 percentage. So depreciated value will be 1000 lakhs into 45 is will come 450 lakhs. This is the depreciation value 450 lakhs. We have to calculate it depreciated value. Both are different. This is depreciation value, how much depreciation occur till the time. This is a depreciated value. What is the net present value we can tell also. Depreciated value of the asset. So this much depreciation happen 450 lakhs. Total 1000 lakhs minus 450 lakhs, we will get the depreciated value of the building, that is the 550 lakhs. And so total value of property, land plus building 160 lakhs plus 550 lakhs, total value is 710 lakhs. For my practice, I am doing this all case study in lakhs only. Otherwise, I was confusing so many zero is there. I am confusing every time. So I first transfer this figures in lakhs and then I have solved so many cases. After practice, now I am good with zero also. Okay. Total you whatever it is simple to you, you use it that method. The total value is 10 lakhs. What is the lessee interest? Lessee interest is the he want to sell the factory. So he get the depreciated value plus he get the land value. 50% transfer after 50% transfer he get the balance land value. Total value of land is 160. Out of this 160, 62 lakhs gone to lesser. Balance will lessee will 98 lakhs. Here 98 lakhs is coming due to this lessee has paid initially 450 rupees square meter. Unearned increase of land means total sale value of land minus premium already paid by lessee. Whatever difference will come, that will be divided. Value of lessee interest is the land is 98 lakhs. Depreciated value of building is 550 lakhs. We have calculated above. So total value, total interest of lessee, land plus building 98 plus 550, 648 lakhs is lessee interest. 648 plus 62 lakhs he will give to lesser. Total value of property 710 lakhs. What is the reversionary value of the leasehold land? The reversionary value is negligible due to a perpetual lease of 99 years and it is therefore not considered. What is the depreciated value of SAD? Depreciated value of SAD is 550 lakhs. We have calculated as above. Okay, my dear friends, we have completed unearned increase case study. Many times this case study is coming and this case study is coming 12 marks. This is a very simple case study. Only practice is required. You do 3 4 times each case study. Total 3 or 4 case study is there. 3 4 case study different type is there. Into you do 4 to 5 times or 20 times. 20 times you do this question. Each time you will take 10 minutes. Uh, then 20 times 200 minutes. In 3 hours, you will become a master on unearned increase of land. Now we learn to profit method for property valuation. This is the simplest method. In this method, what is total income? What is total expenses? You do income minus expenses. That is the profit. That profit is divided by capitalization rate. You will get the property value, capital value. Let us go. This profit method is widely used for valuing income generating property like hotels, cinema, marriage halls, and public venues and petrol bunks. Unlike traditional property valuation methods that focus on physical attribute, this method emphasizes the earning capacity of property. The market value is determined by capitalizing the net profit that the property generates, considering both tangible and intangible contribution. Key step of profit method. First, you calculated gross income estimation. Your last, uh, this method is applicable for going concern factory, yeah, hotel, cinema. His business is going in good condition. He having last 3 years balance sheets, profit and loss statement, and he want to sell his property. Then he will do the property valuation. The gross income is calculated based on the average earning of last 3 years. This approach smooth out fluctuation caused by market condition or operational variation. The income is projected assuming operational optimal management and maximum asset utilization, which helps reflect the full potential of the property. So first we have to calculate it total income, gross income. From this gross income, we minus operating expenses and owner profit and owner risk and other related expenses. Then, after estimating the gross income, relevant operating expenses are deducted to arrive at the net profit. These expenses include staff-related costs, salary, bonus, welfare fund, gratuity, tax and maintenance cost, regular maintenance cost, property tax and utility bills, insurance for both and the building and the equipment, ground rent and sinking fund if applicable to account for future repair and equipment replacement, other business related expenses, publicity, travel, printing and stationery costs. So whatever expenses we are doing, that expenses will be deducted from the gross income estimation. Owner risk and entrepreneurship. When the owner directly operates the business, 15% of gross income is deducted to account for the owner risk and entrepreneurship. If the business is leased out, this 15% is deducted from the conducting charges rent paid by the lessee after adjusting for the owner liability like maintenance tax, etc. Okay, in case study, first you calculated gross income, then calculated total expenses, including owners' expenses, when you are deducting from gross income all these expenses, including honor risk, then you will get the net profit. This net profit divided by the capitalization rate, you will get the capitalization value. Capitalization of profit. The net profit is divided into two parts. First, tangible profit. This is due to physical asset like land, building, and equipment. Some part will go be treated tangible profit, approximate 25 to 30%, and some part intangible profit. Profit generated from goodwill, management efficiency, and other non-physical factors. This will be generated due to goodwill and other non-physical factors. If factory having very good reputation, so automatically more sale will be there, more earning will be there. There, due to goodwill, whatever profit come and management efficiency and other non-physical that is called intangible profit. Rate of capitalization. Both tangible and intangible profit are capitalized at appropriate rate to determine the market value of the property. If a question asking to calculate a different rate of profit, then you have to calculate tangible or intangible profits. Okay, this is additional notes. Minimum 3 years you are having the profit and loss statement and other things, and factory, yeah, cinema hall is working good condition. Same condition will be continue going concern value. By capitalizing the forecast profit, the profit method provide an accurate market valuation of income generating property based on their future profit potential. Sometime 12 marks, yeah, 8 marks case study is coming from profit method. This is the simplest case study. Only you have to calculate total gross income minus all the expenses. You will get the profit. That profit divided by the capitalization rate. With then you will get the capitalization value. Let us start example. Here we will do two example. In balance example, we will do further case study separate session. Yeah, example first on profit method. It is a marriage hall in a town. The daily rental charges is rupees 25,000. The number of booking per year is 50%. Expenses are property tax rupees 25,000 half a year. Staff salary rupees 40,000 per month. Yearly insurance is 35,000. Repair and maintenance 15,000 per month. Electricity 50,000 per month. Miscellaneous expenses 25,000 per month. Management expenses 1 lakh rupees per month. In this question, some things is given yearly, some half yearly, some is given monthly. We have all calculated on yearly basis. Determine the value of profit method assuming an yield of 12%. That is means capitalized rate 12%. First, we have to calculate gross income. This marriage hall is daily rental is 25,000. This 25,000 into 365 per day. But is telling 50% is the vacant. So we have to take the cost 25,000 into 365 into 50%. So from Rental income, total income is 45 lakh 62,500. Assume that is the X. Other there is no income. Only this is income. Rental income. That is 45 lakh 62,500. You got this income. Then expenses. All expenses you first convert in yearly basis. Property expenses given 25,000 for 6 months. Yearly expenses will be 50,000. Staff salary given 40,000 per month into 12. Yearly 4 lakhs 80,000. Insurance given yearly 35,000. Repair and maintenance given 15,000 into 12. 1 lakh 80,000. Electricity per month 50,000 into 12. 6 lakhs per month. Miscellaneous expenses given 25,000 per month into 12, 3 lakhs per month. Management expenses 1 lakh into 12, 12 lakhs. Then you calculated total expenses. Now total expenses, you add all these expenses, you will get total expenses 28 lakhs 45,000. Total income is 45 lakhs. Total expenses is 28 lakhs 45,000. You do gross income minus total expenses. X minus Y. 45,000, 62,500 minus 28,000, 45,000. So net profit is the 17 lakh 17,500. This profit is divided by capitalized rate. Then you will get the value of the marriage hall. This marriage hall value is the 1,43,1200 500. This is the value of the marriage hall. This this question is the simplest question. Sometimes 6 marks and 8 marks. This question will come. He will ask what is the gross income, what is the expenses. Third, what is the net profit and what is the capitalized value of the building. This 4 question into 2 into you will get the 8 marks. Now we have to do one more case study on profit method. Example 2. A client wants to purchase a petrol bunk outlet situated on the main road in the center of town. The main road has traffic of 300 PCU. For the land and the company pay the rent of 4 lakhs per annum. Total annual income from the sale of petrol and diesel and other items is 200 lakhs. Total income of petrol pump is given 200 lakhs. He made the simple question. Otherwise other question they will give the petrol income separate, diesel income separate, oil income separate. Then you have to calculate it. Here directly given 200 lakhs. Property tax is 50,000 into 6 months. Staff salary and other outgoing is 60,000 per month. Other expenses for running the business 1 crore 70 lakhs. He given directly to you 170 lakhs. Total gross income 200 lakhs. 170 lakhs is the cost of assume raw material. That is cost of petrol. Rate of capitalization is 12%. He is asking what is the total income for the owner. You first calculated total income. What is the total expenses of owner? Calculated total expenses of owner. What is the net profit? 1 minus 2, you will get the net profit. What is method to be used? Profit method. What is the YP? 1 by 12. 8.33 is a YP. What is the amount the client can pay to purchase the bunk. Whatever capitalization value will come, client ready to pay that value. You divide net profit with capitalization rate, you will get the capitalization value of the bunk. Now you make a practice, you write first data. Ground rent is 4 lakhs. Income from sale of petrol 200 lakhs. Property tax 50,000 into 6 months. Staff salary and other outgoing 60,000 per month. Other expenses 170 lakhs. Yearly rate of capitalization 12%. This is given in question. This I am solving this question in tabular form so that it is easy to control me so many zeros. Otherwise, I was confused so many zeros. Yeah, otherwise you transfer first in lakhs. Ground rent 4 lakhs. Income from sale of petrol and HSD 200 lakhs. Total income 204 lakhs. 200 lakhs plus 4 lakhs. Company paying the ground rent to the owner. So total income owner is 204 lakhs. Expenses of the owner, property tax 50,000 into 2, 1 lakh. Staff salary and other out expenses 60,000 into 12, 7 lakh 20,000. Other expenses 1 lakh 170 lakhs. The total expenses 178 lakhs 20,000. So you calculated first total income, you calculated total expenses. Your two question is done. 2 marks you got is 2 mark, you got is 2 mark. Now you calculated net profit from total income minus total expenses. You will get the net profit. Net profit is coming 25 lakhs 80,000. What is method to be used? Profit method. Year purchase 1 upon R, 1 divided by 0.12, 8.33. Here we can write so many books is written. Year purchase sometime is the 100 upon R. Do not confuse. This is the same thing 1 upon R. Here you are writing 1. You are directly writing here say 12% divide by 100. You are doing calculation here directly writing 1 0.12. If 100 this will come up, then same formula will come. 100 by R or 100 by 12. Do not confuse whatever fashion you like it, you do the uh, case study numerical question. Now YP is 8.33, 1 divided by 0.12. If you divide it 100 divided by 12, then YP will also come 8.33. What is the amount the client can pay to purchase the bunk? Net value divided by capitalized rate. That is equal to 1 to 15 lakhs. The amount that can be paid for this 2.5, 1.5 crores. If anyone is paying 2.15 crores or more, the owner can sell the property because property value is the 2.15 crore. These both methods are very simple. Unearned increase of land price and profit method. We will do more case study in case study separate session. That separate session we will take it after completing of income approach, market approach, and cost approach. We will try to do 25 to 30 case study for your practice. Thank you. Thanks. Before leaving the session, please do not forget subscribe the channel, hit the notification bell or like and give your comments. Thanks. Thank you.